All right, good to go. So as always, guys and gals, if you have any questions, throw them on over here in the chat, and I will do my best to go through them here before the cash open. But yeah, quick look here at the futures. And so far, a pretty good pop here post CPI. So S&Ps are up about 0.7. The NQ, which of course your tech names were getting spanked yesterday, NQ's up about 0.8. And you got some buy signals going here. The Dow Jones futures, all 30 of the Dow stocks are up about 0.5%, and the RUT. IWM is up about 1% as well. So for the S&Ps here, right, what I'm looking for is for a path into 4,200. We talked about this on Monday morning. Got a couple things lining up there at 4,200. For one, it's your previous swing high. Let me clean this up for y'all. Let me make this a little easier on the peepers. Drawing tools. There we go. All right, so 4,200. Not only your previous swing high, but it's also that weekly ATR trailing stop, which ever since we've been in a weekly downtrend, that's been the key level. All right, big push back there, roll over, big push back into the trailing stop up here, roll over. And then your January market looks a lot like your current market. You're locked and loaded in a weekly squeeze. You got some weekly buy signals. All they're able to do is take it into the trailing stop, and then we roll over again. So bigger picture, what really opens the door here for, in my opinion, a lot more upside would be if the weekly squeeze could finally fire long, and in the process break above that 4,200, and then shift your weekly trailing stop. Like in a sense, it should kind of look like it did back here after the COVID dump. Now we've got a better looking chart right now, but point being, shift of the trailing stop with some buy signals, decent indication they want to try to take it higher, right? And you haven't seen that shift in the market since this downtrend starts. So at a minimum here, I think over the next week or so, we could come up and smooch that 4,200. Now, as far as a good entry, and of course the SPX is going to gap up a little bit as well, that could be a little tough. So usually with a big gap up, you're going to get the initial knee-jerk reaction, called it. But now the question is, how does it all behave from here? So for example, you could anchor to say, your 3-minute chart or your 5-minute chart. And now the question is, all right, we've got a big pop. All right, with that big pop, you got a bunch of buy signals here. But how does it handle the first back test? All right, the first dip to a 21 EMA sees this thing rolling over. Well, you probably don't want to look to continue to play it long. But if your 3-minute chart, your 5-minute, the 15, the 30, if all these lower time frames from here can behave like an uptrend, that's where I think you get your entries. Right? Meaning it could be a pullback to a 5-minute 21, could be a pullback to a 15, a 30-minute. You take your weapon of choice. But that's what I would look for this morning. And that's where it gets a little tough, right? Your 5-minute 21 is $15 below the current price. All right, so maybe you got to take it a little lower today. And you check out a 3-minute chart. Well, we're $10 above the 3-minute 21. All right, so now we're looking to get really aggressive. We are really fiending to buy the dip here. If you're quick and you enjoy day trading, there's your entry. Now you can look for that entry in whatever time frame you prefer to trade, but that's where I think you can take some shots here. Right? Don't chase it into the big gap up. Pretend this is your 5-minute chart on the SPX. It's your first initial push. Here's your first back test. Back test to the 21 EMA, back test to the trailing stop. Well, from here, it's pretty simple. Right? By definition, an uptrend, and that's what we're looking for on the lower time frames, right? Uptrends. By definition, an uptrend is a series of higher highs and higher lows. So here's your high. We should hold here. That should be your low. And from here, we should continue to go on and make a brand new higher high. So the major difference, of course, between a 1-minute chart and a 30-minute, your 1 minute's going to be a heck of a lot quicker. But a bigger picture, as far as trying to play for a path here into 4,200, that's a game plan I'm looking to work, until that no longer works. So for now, we got some calls on the futures, and I locked up a little bit earlier. But as far as the gold room and my mastery, we got the next Friday expiration 4110 calls. So that's what's up with that. And I think a big piece of the puzzle today is going to be whether or not the QQQ and the Googles, the Microsofts, the Apples, whether or not they can rebuild the lower time frames and get the party going back to the upside. A really, really interesting day yesterday. You had your big boys, Microsoft, Google, they're down 2 to 2.5% yesterday, and the S&Ps were just dead flat. Literally dead flat. I think we finished a day unchanged. So that to me was pretty impressive. Your what I think are your most meaningful stocks, your most heavily weighted stocks, they're getting hammered all day long. But for those of you that watch the internals, like the advanced decline was just advancing all day long, even in the face of Microsoft and Google getting smacked. So that to me kind of says, well, if Microsoft and Google and Apple and Amazon, if they can kind of get up off the floor here, right, sober up a bit and get the party going, I think that opens the door there for that push into 4,200 on the S&Ps. So that is what I got for y'all. Let's see, gold futures, always a hot topic of discussion. Yeah, no big pullback here in sight just yet. But a few names for today, and as always, this is all contingent on the market trading higher. So if your S&Ps and your Qs take a big dumper, don't expect any of these ideas to work. But a few names that I do like here. One being Advanced Micro Devices. You might know it as AMD. All right, so here's what I'm looking for. A repeat of the move you had back here. Right, so what you had back there, and that was early March. Daily squeeze. And a big push off that daily 21. Right, so I'm looking for the same exact move. Now, one observation. Back here, your daily chart prints the buy signal. Right now, it's neutral. Now look down here at the MACD histogram. Back here, the bulls had a fresh tank of gas. Right, MACD crosses above the zero line and pumps. Well, that pumps the price. So with the fresh tank of momentum gas, it's a lot easier for them to take that move off that 21. Now the gas tank is negative. So in your car, you're driving and you got 50 miles till empty, 30 miles till empty, 20 miles till empty. This is negative mileage. Somehow we've gone into the negatives. So I would like to see a shift here. If you're going for a swing trade, you want your daily momentum to be supportive of that push. Now, doesn't mean things are going to fall apart here, but look at your daily squeeze back here. If you're buying your calls or you're doing your call debit spreads and momentum does not support the push higher, it's just kind of dead money for a while until you get your fresh tank. So rule number one, I would like to see the daily histogram shift back above zero. And then the template here for a big push, right? Your confirmation, your trigger, that's going to be buy signals across all your lower time frames. Right, so what should the 1 hour chart look like? And I think you all want to do this for all of your go-to trades. Right, go back and study good examples. And back here before we get that huge push off the daily 21, before that daily squeeze fires, the hourly chart's locked and loaded. Right, all kinds of pretty buy signals. What about the 30-minute chart? Right, what should that look like? You got a crap load of buy signals. And your 15-minute and your 5-minute. So that's the playbook here for an AMD swing trade. And what I'm looking for, if that all comes together here, is a push back towards these highs. Got to keep it above the daily 21. We'd like a couple more buy signals, but we would like to really see that daily MACD histogram shift back in the favor of the bulls. So I'm liking AMD. And another one I wanted to show you here real quick is Shopify. Right. Now, the reason I show you Shopify is a few days ago, it was one of my favorite setups in the market. Get a beautiful weekly squeeze, like really nice weekly squeeze. The daily chart has got a squeeze. It had a bunch of buy signals, and everything on your lower time frames, was really lining up here for a push higher. Now this all gets a little bit iffy at best. The daily chart quickly goes from bullish to neutral. Our 1 hour chart is in a downtrend. And everything over here is pretty neutral as well. So when we're talking about that first back test, all right, here's a good example of where you want to be a little bit cautious. You have your daily squeeze. They try to rip it higher, right? In the process, they print your daily buy signal. But look at how it handles the first dip to your 21 EMA. Daily chart immediately goes neutral. Histogram begins to break under zero. And all your lower time frames are getting beat up. So while we focus on a lot of things that are usually clean, like, hey guys, I like shop because we got buy signals from left to right. At least for now, this is a good example of where you want to be a little cautious. Okay, ideally, you're pulling back to your 21. You're holding your 21. You're keeping your daily buy signal, and all your lower time frames are still in good shape. So now what do you do with the Shopify from here? Well, you wait until it looks like it looked right back there. All right, so develop that template for yourself. If I'm trying to catch Shopify for a huge rip here, well, what should that hourly chart look like? And basically, you should always have a buy signal. Right now, it's bearish. Right, what should the 30-minute chart look like? Should have a bunch of buy signals. Right now, it's neutral. So this can save you a lot of time and frustration where you got to have your reasons for liking a setup. And as soon as those reasons disappear, you might want to hit the road. So my favorite name for now would be AMD. But my major focus here is going to be the S&Ps. SPX and the futures. Now you might get your dip to a 5-minute 21 here. Yeah, I don't know. Maybe not. You just need another $10 lower. And to get a decent dip. But all right, my friends, that is all I got for you for now. So if you got any questions, anything you want to take a look at, throw it on at me here, and we'll bang a few out. See what y'all got. LT wants to take a look at crowd. I think there's cleaner setups out there, right? For me, at least, kind of a tough read. And the reason being is over here. Weekly and daily are neutral. So as far as a directional trade, they don't really offer any edge. Now, the 4 hour and the 2 hour say we go lower. The 1 hour is neutral. These two were bullish. And this one's neutral. So for me, my style of trading, it's a little bit too much, tug of war between, well, we're neutral, well, we're going lower, or we're going to go higher. Where my preference for a swing trade or even a day trade is as many of these time frames are on the same page as possible. So if we're looking for an iron condor, well, then I'm going to put the iron condor on when my weekly chart all the way down to my 5-minute are neutral. Like, that's perfect. We're not bullish, we're not bearish, we're just chopping ourselves silly. If I'm going to get short something, ideally from a weekly down to a 5-minute, everything's bearish. And then vice versa for something we're trying to get long. Now, it's not always going to be perfect, but if we have 1, 2, 3, 4, 5, 6, 7, 8 time frames here, I at least want 5 or 6 of them to be on the same page. So what I would do with a crowd strike here is wait until I have that kind of clarity. That makes your next long or your next short a little bit easier. Yeah, JB, I'm playing around with the histogram settings, and I'll have a little bit more info on that shortly. But what I have been rocking with is 24, 52, and 9. And what I've noticed is that kind of cleans things up a bit on the lower time frames. Doesn't tend to affect the signals too much on the larger time frame. But for your 5-minute, 15-minute, it's a little bit of a better pace. RJ's got some PXD. Pioneer. And then Mark V, I got a quick video for you I can link you to. As far as the big three in action. PXD. So with a quick glance here, you do want to be mindful of your weekly sell signal. But generally speaking, everything else is on the same page. Daily, the 4-hour, the 2-hour, the 1-hour, the 5-minute. So that tells me from the ground up here, it might want to go higher. But I do got to take a quick look at the weekly chart. All right, now the weekly chart does get back above that 21, which is good for the bulls. So for some context here, I think if you're trying to get long, you don't want to see that back under the weekly 21. Otherwise, you could just see continuation of what could be the beginning of a weekly downtrend where you flush, rally back to the 21, and then roll over again. So with a weekly sell signal, that's going to be key support. And just like I'm doing on the S&Ps, I think you want to be really mindful of your weekly trailing stop. All right, as far as potentially getting back into a weekly uptrend, like a video game, that's the final boss. All right, they're back above the 21, maybe they cancel the sell signal, but they got to take down that big guy. Then potentially you're getting a total shift of trend. Very much like back here in late 2020. So 2 levels to watch there. Back under 217. Based on that weekly chart, there is a decent chance it could go right back down. And then as far as some short-term resistance, you have your weekly trailing stop. What's that, Pioneer? Yeah, Pioneer. Earl, how significant is the jump in GE today? To be transparent with you, I'm not even too sure where GE is. I know John talks about it in the options Zoom every now and then, but I'm not too familiar with it or the significance of it, going higher or going lower. So that'd be a better question for a JC, a Sam, maybe a Henry. Yeah, euro dollar futures. That's right. Yeah, that's a little bit above my personal pay grade. So probably a great question for those fellas. Dr. Bob has got some Starbucks. S-Bucks. Keep in mind, we are coming up on earnings season. Not my favorite, but we are coming up on it. But Dr. Bob, I think the big to-do here on Starbucks is going to be your weekly squeeze. And I think for now, there's a lot to like about your weekly chart. All right, you have trend-like behavior, consolidation, squeeze fires long. In the process of firing long, you finally get a weekly buy signal. And here's that first back test. break your 21 a little bit, you come down to your trailing stop, but it holds everything really well. Never lose your buy signal. Now you get a nice combo here. Weekly buy signals and a brand new weekly squeeze. So I think the key from here is just, for a swing trade, what do you deem to be a good entry? And my rule of thumb is if I'm buying it up here, we're 1 or 2 average true range moves above that 21 EMA. All right, I'll take a nibble up here if I really like it. But if I'm buying it at 105, and tomorrow morning we're pulling back to 103, well, as long as we hold up, I'm going to buy a little bit more, because that's usually the juicy entry. Right? If you've really got a good uptrend, if you're really focusing on a strong stock, if you're buying it up here, you wake up to a pullback like that, in the grand scheme of things, there's your best entry. So the same can be said for a lot of things right now. NVIDIA, taking a nibble at 280. I think you nibble more at 265. But yeah, looks good. All right, guys, couple more here. UNH. It's a little bit too gonzo for me. Strong, of course, but for a swing trade, I don't want to buy it at 520 and then be excited about a pullback to 490, which doesn't seem that likely. And I wouldn't bank on a pullback like that. But I feel a little bit late here. So what I would do is just day trade it. Go look for one of my, one of my 2 go-to trades and just work on a 30-minute, 1 hour, a 15-minute. Get long in an hourly squeeze, buy a pullback to your hourly 21, your hourly trailing stop. And, while I do love the swing trade, I think the benefit of that is if this thing just wants to go, nutty for a few weeks, well, you keep on milking it for everything that it's got. But you're eliminating that overnight risk of, hey, here comes what's typically going to end up eventually being a buyable pullback all the way back down towards 500. So back here, I'm thinking much more, all right, let me get locked and loaded. Let me try to catch that first swing trade push. And then if they want to keep on pumping it, well, I'll just day trade it. Wine it and dine it and take it to lunch. And Craig, my favorite ticker for a strong trade. Now, mind you, it all comes down to the S&Ps and the QQQ. So this idea won't work if the Qs roll over or if the SPX rolls over. But if they're firm and they keep it pumping, I like AMD. I think AMD is coming back to. Oops, there we go. Pull back to the 21. We're in our daily squeeze. So now what I'm looking for is a repeat of this push. But everything's got to come together to get that push again. So the first thing I got to see here, down on the MACD histogram, is that momentum shifts positive. All right, back there you got positive momentum in your daily squeeze. So off they go. And for now, you're in your daily squeeze with negative momentum. And that's why we no longer have a daily buy signal. Right? Negative momentum cancels out any buy signal. So if that can shift back above the 0 line, and then if our 1 hour, 15-minute, 5-minute, if all these guys can go bullish, then I'm looking for a repeat of a push like you had back here. Daily squeeze fires long. And listen, if you got a strong market, I think you're looking for a break through these highs here. But can't stress enough, if the market pukes it up, AMD very likely to do the same thing. But all right, my friends, thank you for your time this morning. I got to go help my wife out real quick and then get ready for the open. But yeah, for those of you that took that trade with me on the S&P futures, that's the focus today. How do we handle these back tests? All right, now what I don't want to see is we pull back to an hourly 21, we fall apart, and we're back down here towards 4,100. Way before 4,100, we'll be wrong on that trade. But given that you had your CPI pop and things can get a wee bit volatile, I do expect a dip here. And this is kind of what we're looking for, right? Totally reasonable to expect a pullback to a 5-minute 21, but you want to see them hold it like this. And if we're really strong here, then from here we should quickly go back up, take out those highs, and keep the party going. But all right, my friends, thank you for your time today. Let me check the schedule. I might be back to party later. Am I back to party later? Nope. I'll be in the gold room from, that's a weird session, 2 to 3 p.m. Eastern. So I'm the warm-up guy for Power Hour today. But all right, traders, have a good day, and we'll talk soon.